With Ether Bitcoin ratio futures, it's now possible for market participants to gain exposure to both Ether and Bitcoin markets in a single trade. Ether and Bitcoin are highly correlated, but nuances in the market sometimes impact one coin more than the other. This can create opportunities for market participants looking to capitalize on changes in the relative strength of the correlation. Ether Bitcoin ratio futures provide an efficient and seamless way to trade the relationship without the risk of price slippage. The quoting convention for Ether Bitcoin ratio futures is the number of Bitcoin needed to buy one Ether. A market participant who buys the ratio is anticipating that the ratio may increase, implying that the price of Ether will outperform the price of Bitcoin. On the other hand, a market participant who sells the ratio is anticipating that the ratio may decrease, implying that the price of Bitcoin will outperform the price of Ether. The ratio can be determined by dividing the price of Ether futures by the price of Bitcoin futures using the same expiration month. The contract multiplier is $1 million and the minimum tick size is $5 per contract. For example, assume you buy a June 2024 Ether Bitcoin ratio futures contract. The notional size of the contract can be calculated using the June 2024 Ether futures and June 2024 Bitcoin futures prices. In this scenario, say the price for Ether futures is $1,890 and the price for Bitcoin futures is $30,255. The ratio is equal to the price of Ether futures divided by the price of Bitcoin futures, rounded to the nearest tradable tick, which goes out 6 decimal places. Then, to derive the notional size of the contract, you'd multiply the ratio by $1 million to get $62,470 for this scenario. Now let's look at an example of how someone might use Ether Bitcoin ratio futures. Say a market participant following cryptocurrency markets believes that the price of Ether will rise more than the price of Bitcoin. To benefit from this potential outperformance of Ether relative to Bitcoin, she decides to buy one Ether Bitcoin ratio futures July 2024 contract at the current price of 0.061805. Later in the day, assume that the price of Ether rose 5% to $1,984.50, while the price of Bitcoin stayed the same. As a result, the ratio increased to 0.064895. The market participant's gain or loss on the trade can be found by multiplying the number of contracts by the change in ratio and the contract multiplier. In this scenario, the market participant would have gained 0.00309 on the contract. This means she would have made $3,090 on the trade. Ether Bitcoin ratio futures are a precise and efficient way for market participants to express a view on the relative value of two of the largest cryptocurrencies in the market. More information can be found at cmegroup.com/EBR.